Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, July 23rd, 2018, and people, I personally am not liking the way this market is trading today. Granted, as I am doing this video blog, stocks are down only a little bit. However, there's a few things in place which I actually covered already this past Saturday when I did my look ahead video segment. If you haven't seen that, please go have a look at it. I really covered some important things. Now, as I am doing this video blog, again, stocks are lower, not by much, lower nonetheless. But the issue here, once again, is the bond market. Bonds are selling off. After last week, President Trump making it very clear that he wants to keep the easy money going into this market, making it clear once again that he's not happy that the Fed is talking about raising rates. Now again, let's put that into a perspective. We're talking about a 25 to a 50 basis point hike affecting the short end of the curve. And if we really were in a strong economic environment, this wouldn't matter, not even at all. It would be like a non-event. So you have to really wonder what's going on here. And I've been explaining to you that the Fed is doing what they're doing, not because we're in an economic boom, because we're not, but they have to keep the illusion real. So by President Trump saying what he said, it kind of strips that away a little bit. And that's why stocks are somewhat under pressure. This is a huge week for earnings. It's huge. Now, this is going to set the tone for the next several weeks. If this market can't find a catalyst to move higher, this week, there's trouble coming here down the pike. And again, it's all about the bond market. Now, the 10-year yield is creeping up towards that 3% mark. Market doesn't like that. You know that. The only thing people, believe me, and I know you get it, that's kept this market propped up like this is rigging in the bond market, artificially suppressing interest rates. That's it. It's not about valuations. It's not about earnings. It's not about forward guidance. It's about easy money into the market. That's what President Trump wants to keep going, and that's why bonds are there's a little trouble here in the bond market. It's going, well, hold on a minute. What's really going on here? But that's the issue. And then, and then there's the whole other thing where we could, unfortunately, enter into a full-blown trade war, a full-blown currency war, a debt war for which the United States cannot win. Period. That's the truth. We also found out today existing home sales fell off of a cliff. Housing prices are skyrocketing here. You can see the bubbles. They're everywhere. Multiple bubble environment. I can't stress to you how dangerous this is, and we've never seen this before. These distortions in this market are extreme. Now, let me cover something else real quick. Now, in the video that I did Saturday, and I was explaining that I felt like this market this week has the potential to fall. There's already talk out here that Greg Mannarino is talking about a market crash. I've seen it. I am not talking about a market crash. I hate when people put words into my mouth. I did not mention a crash. I said there's a potential for a sell-off this week, depending on what happens in the bond market and a lot of geopolitical events. Market has got to burn off. That's a fact, what's going on here. So as I had explained also, I did take up a short position against the S&P 500. My goodness, here I'm going out of my mind. August 280 puts. August 10th 280 puts. All right, now you can play that however you want. This is a small initial position on my part. If this plays out, if I see the market momentum to the downside pick up, I will add to that position. You all know how I play this. Minimize those losses, maximize those gains. It's not that hard if you play it smart. You got it? Anyway, with that said, let's see how this day plays out. It's going to be interesting. There is no doubt about it. And we'll talk about it at the end of the day. See you then.